Good morning. It's Monday, April 21st. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So welcome back, and we've got some significant overnight moves in several different markets. So let's check in on the dollar, stocks, gold, and interest rates. So you get the dollar index about 11% down from the January highs, and we're extending those losses here down about 1.15% at 97.98. So it's down 114 points here at the moment. All of your foreign currencies are all green on the screen, and anything that we export over here as far as agricultural markets are all up as well. You've got precious metals with a significant rally, with gold up over 2% right now, trading over $3,400 for the first time, hitting 3409.10. That's up $78 here in the overnight session. You got silver up 42 cents at 32.88. Copper futures up 5.55 at 4.79, and platinum and palladium getting just a little bit of love here, up about $3 each. Now you do have U.S. equities under some significant pressure, and it's down 1% on the S&P 500, the Nasdaq down 1.14, the Dow Jones down 0.088, and then also the Russell down just under about 1%. So a lot of pressure there, a lot of pressure on the energy markets here. Bitcoin up about $2,400. So the dollar and the U.S. stock futures, they dropped on Monday due to concerns that President Trump will fire Federal Reserve Chairman Jerome Powell. He's been really aggressive on this and saying that he should have already cut rates already, but the prospect of Powell's removal is seen as a threat to the credibility of the Fed and the dollar. Firing Powell takes away the principle of central bank independence, and it also risks politicizing monetary policy. The Fed will and should remain on hold until they get clarity on the impacts of tariffs. The last thing that Jerome Powell wants to do is cut interest rates to appease Donald Trump, and then we see that inflation fires back up and everything ramps up, because it's going to be a lot higher than what it was before, because of the fact that you're cutting rates in a rising inflationary environment, which could be really bad for the economy here and really put people in a pinch. You'll see housing prices shoot up dramatically. You'll see automotive prices shoot up dramatically because of the fact that they're cutting rates, because of the way that interest rates move on the teeter-totter type of play. So the Fed, again, they should really be on hold here, which I agree with. So the selling's also driven by some concerns about U.S. and China and the trade war and the impact on the economy. China over the weekend accused Washington of abusing tariffs and warned countries against striking a broader economic deal with the United States at the expense of China, kind of ratcheting up some of the rhetoric here and spiraling the trade war between the U.S. and China, the two largest economies, kind of taking that up and bringing it up further. Now, if you look at U.S. equities, we are going to have some earnings start to come out here, and a lot more earnings as the week goes on. You got Tesla down 3%, Meta down 1%, Amazon down 1%, Microsoft down about 1%. Same thing with Alphabet, Apple, Nvidia down 2%. So you're going to expect to see this kind of volatility here, and it's going to continue until we get further clarity on the tariffs. So from a strategy standpoint, you always want to kind of define your levels, choose your direction, and then have an open mind, play out different scenarios. If the market breaks A, then we could see a move to B, or if we break below A, we could see that move down to C. So really just having clarity and open mind, and like Bruce Seeley says, be like water, and wherever water flows, that's where you want to go with your trading here. So checking in on the precious metals overnight, you got gold up $79, 3407.50. Again, that high 3409.10. So gold prices are hitting that record high. The faltering dollar, the worries about the global economic slowdown, the rising trade tensions between US and China have all kept bullion and safe haven demand under a bid right now. So again, it's the attacks on Fed Chairman Jerome Powell and just bringing that dollar down to a 3-year low, really making things like gold really appealing to not only U.S. investors but foreign investors. You got Goldman Sachs forecasting that gold could hit $4,000 midway through next year. So copper prices also hitting about a 2-week high on Monday. You look at the direct attacks on the Fed, and you look at the way the CME's Fed Watch tool is playing out, what's expected in 16 days, we've got that next Fed meeting, and there's a 10% chance of a 25 basis point interest rate cut. You go out to June 18th, that's the one that most analysts are looking at, and a lot of the financial institutions, about a 69% chance. So it's really kind of trickled down a bit, the prospects of the Fed cutting rates. You look at the ETF flows, and gold just hit a new record high as I'm doing this video. Exchange traded funds, they actually cut 83,000 ounces of gold holdings on that Friday session here, booking some gains ahead of the long weekend because there was a lot of discussion that the possibility that they could strike some kind of deal with China. And Trump was really playing out that theme throughout the weekend that they were going to strike a deal. So you saw a lot of people front run this. They were buying U.S. equities on Friday. They were liquidating gold holdings. And then later in the session, we saw some of the dip buyers really come in, especially as we broke that $3,300 level. So silver futures have been getting quite a bid. The ETFs added 667,000 troy ounces of silver holdings on that Friday session. 6 straight day of growth, longest winning streak since February 19th. So you look at the year-to-date percentage changes and kind of the summary of the ETF precious metals holding. You got gold up 7.9% year-to-date. That's the largest change we've seen all year long, and then the same thing with silver up 2.4%. Now, oddly, it doesn't play into the ratio because, like I said, they are two independent things, and you can't use valuation because of the fact that you do have such an impact on the industrial demand side of things, with 54% being silver being industrial demand. You look at platinum and palladium, it's even significantly higher. It's like in the 60%, and then most of the demand comes from auto catalysts and things like that. So you're going to need to see those types of things pick up. China maybe strikes some kind of deal where they start importing some US vehicles and things like that. And that's where, if they relax some of these safety restrictions, we could start to see really automotive start to pick up again. And that's where you'll see that platinum and palladium start to take off. But that's a whole nother topic of the discussion. You look at crude oil futures down about 2.5% here. So we're kind of running into some resistance and then really getting hit here over the weekend because there are signs of progress in the talks between U.S. and Iran. People are also concerned about the economy, the headwinds of tariffs, which could curb fuel consumption and demand here. And then you've got also the IMF. They cut growth forecasts because of the fact that they believe that Donald Trump's policies are really going to impact the global economy. So fears that there are some concerns that, again, that demand comes down on the oil side, and then OPEC plus their alliance to bring back production faster than expected pace has really weighed in on products. So copper futures making new highs right now, gold futures making new highs right now, dollar index making new lows, and foreign currencies pushing up. So that's really the theme here. We do have not a lot of economic data in the beginning of the week here. So Monday, Tuesday, and Wednesday, you're going to have about 10 central bank speakers, so 10 FOMC speakers. Many of them are voting members and non-voting members that are coming out, and it's not until Wednesday where we get any kind of significant economic data and market moving things. So, keep an eye on things, define your levels, define your strategies, limit your risk on markets, and keep an open mind on which way to trade these markets is my suggestion. So you got any questions, reach out to the trade desk here. You want to open up an account, shoot an email to info@bluelinefutures.com. And remember that futures and option trading, it does involve risk of loss and may not be suitable to all investors. Good luck, good trading.